All right, let's get started. It's been a while coming back to doing live again after quite some time. Hopefully, using a new platform here. Hopefully, if everything is working, I'm going to be talking for a few good seconds just to make sure it populates and shows that we are going live. It's been a while. Hi, everyone. Dani Beit-Or here from Southern California. And obviously, we're going to talk about real estate investing. And I thought I'll jump into a short session about the number one asked question or the number one misconception out there. And that is, Danny, and I get it almost on a daily basis, is this a good time to invest? Or what should I expect? And that's obviously a little bit tricky as always. So let's understand what's going on right now. Bear in mind, there are different U.S. metros behave in different ways, right? Not necessarily what's going on in New York is like Kansas City or Austin or I don't know, Tulsa, Oklahoma, right? So we have to keep that in mind. But let's recap what happened in the past almost a year. So starting July 2022, we started seeing the real estate markets, right? It's just around the time that the inflation rate was very high. We started seeing that the Fed is starting to hike the interest rate, and that's where things kind of start slowing down, right? So July 2022, not even a year ago, we started seeing some correction period, cooling off period, and how does that translated to the day to day? Well, for the most part, there was a lot of uncertainty. For the first 6 or so months, people lived for the majority like what's going on. And that was a very confusing time because a lot of people would read the headlines, and the headlines are showing or telling this company is letting people go. And obviously, we've seen companies letting people go in the past year less. But if you actually read carefully, all the headlines or dive into the details, you'll probably notice two things. One, when a company like Walmart announces or the headline says they're letting people go, and the number of people they're letting go in one of the headlines, 2,000, right? So Walmart is what? 1.1, 1.2 million people, employees, and they're letting go 2,000. That sounds bad. And it is bad for if you're one of those 2,000, but that does not send a strong message to the market. Walmart is in trouble. 2,000 million plus employees is a small number. When you look at some of the tech companies and you actually try to not see what the number, that the headline, but what's the percentage of the employees that are letting go, and you're looking at the big companies that have let people go, you're seeing for the many times the numbers are relatively small percentage wise, and many times that just means the companies, maybe cutting the fat, so to speak, right? So it's not horrific across the board. People are losing their job. At the same time, different months are showing there's still low unemployment. There's in jobs. Even I think April 2023 results I think they did better than predicted. So we get mixed signals, right, all the time. What do you do in mixed signals? You get confused. Now, when we talk about real estate, obviously, me too. When you talk about real estate, what are we seeing? So the properties are not necessarily dropping dramatically in prices. Some places may, or some properties do, but generally speaking, prices are not crashing. What we do see is properties are sitting a little bit longer. And when I say a little bit longer, let's understand. So we're up until July of 2022, we were all got used to the past years that we list a property on a Friday or a Thursday, and by the end of the weekend, we have multiple offers. That was the norm for a few years, right? It's not normal, it's crazy. And we were just got used to it. What we maybe forgot is that when things are not crazy, right? The normal times of listing properties is you list on a Thursday and Friday, and then you wait a week or 2 or 3 months, sometimes a month and a half, and then you start showing people are seeing the properties, offers are trickling in. So all of a sudden people were like, oh, the house is listed 2 weeks and they're still on the market, and what's wrong with this house? Like, people are going crazy. How is it possible that the property sits on 2 weeks for 2 weeks and there's no offers? There's got to be something wrong. So please take that in perspective. Normal times, houses sit 3 weeks, a month and a half, maybe even 2 before getting sold, right? So that's just what normal. So what happened is we are going back to normality, right? That's one thing. Second thing, we sellers also thought, we are still, in July, sellers were still in mindset, and agents maybe, of the first half of 2022, and they took some time to kind of get used to the new norm. You list and you wait. You may get multiple offers. You maybe not. Maybe you don't even need to do some price adjustment, but just generally kind of thinking about it, things are going back to some normality, or what normally happens. And also we're definitely seeing some corrections, right? So things went up like this, right? Rents and values, it's only normal that things will correct themselves a little bit, right? So we're seeing some correction. Now, when things are turning from a hype of growth to slowing, everybody's like stopping. Okay, why? Nobody wants to do anything during an uncertain times. Everybody's stepping onto the sideline, sitting in the sideline, waiting and watching. And people started sitting on the sideline, even some of my clients. Let's see what happens. And a lot of negative predictions and a lot of unknown. All right, I get it. Nobody wants to invest during times of uncertainty. Makes perfect sense. Then we started seeing that, towards the end of last year and the beginning of this one, there was a period of greater uncertainty as the interest rate keep, going up, right? So we're still kind of not sure what's going on, which were good time for us if we were buyers. If you are a buyer, someone who looks to buy properties, and this is something I've been kind of, I don't want to say preaching, but keep telling, and my clients, in times of uncertainty in the past, I've always learned and saw those are rare times, and they're usually work in the buyer's favor if you're a buyer. So I like to exploit times of uncertainty, which we tried to did in the past several months, and always knowing and saying, and it's on record, that window of opportunity of uncertainty will eventually close down, right? And I think, I'm not sure yet, but it seems like this is where we're going. So we're seeing right now, so this is May 2023, and we are starting to see some transition where inventory out there dropped dramatically, right? Buyers also drop, but not as dramatically or not as equally to the inventory. So the bottom line, the main, not the bottom line, but the force or vector that operates here, supply and demand, right? We had it here, maybe, demand is up here and supply is down here. And then that was up until mid 2022. Then supply dropped and the demand, buyers, dropped as well, not as much. There's still people are buying out there. What are we seeing right now? A lot of people won't let their houses go, because that means they're letting this 2.5 interest rate, 3% interest rate, whatever, they don't want to let it go, right? Because that means if they're selling a house, the house they will need to buy will be at 6%, maybe 6.5%, maybe 5.75, percent. That means the affordability really different for them. So they have to go to a smaller house, a cheaper house, a farther away house. So add up. So people are saying, wait, not only it's time of uncertainty, I'm still waiting to see what happened with the economy, but also, why would I let my house go with a great interest rate that I locked in the past few, 3 years ago or so? So people do not let them go. As a little anecdote, this past weekend, we went to a house locally in Irvine, California, or Newport or Irvine. Can't remember which one was it. And the agent told us the last 3 houses they sold all came from inheritance of people who passed away, right? So not your typical seller, just life happens. Someone, at least the one that I know in good, at an old age, passed away, and that became property. So those are the sellers all of a sudden, or the people who inherit those properties. So that's selling right now, who are selling, right? So this is what's happening. A lot of people just won't let their houses go. So we don't have inventory. Now, with the increase of interest rate, builders are saying, wait. Interest rate is higher. Builders are steering away. So I am not gonna speed up, construction. I'm gonna slow down, which they have. So we have the demand is strong, the supply is low, the demand keeps staying the same, but in a way it's not increasing by construction. What do you think is going to happen? Now, on the top of that, I thought so because I've seen it happen in the past, and I told our clientele and the people that I work with, eventually, as humans, we will get used to the new interest rate, the new norm. It takes time, right? When it first goes up, we're like, oh my God, to be 3.5. Now it's 5.5, and it's 6, and it's crazy, and it's crazy. Yes, it is. But after several months, we're like, okay, it's 6 or 6.5 or whatever. And that's the new norm, at least for now. It doesn't mean it will stay there, but at least for now. So now, what happens when a new interest rate kind of normalizes itself and becomes our de facto? And it is what it is. We just, as people, we get used to it, we accept it, and we understand this is part of what, of life, of the new life or the new era or the new interest rate. And then people are shifting back and saying, okay, it is what it is. Let's just find a way how to make it happen, because I still need to buy a house. Still need to move. I want to buy a house. My first house, I need to move, etc. Life still, while those things happen in the economy, life still happens too. Now, I am coming from a position from a real estate investor, and this is normally the content of what we're talking about. But remember, the residential industry is primarily homeowners. So behaviors are behaviors of homeowners and not investors. The investor, the big tail leading or following the homeowners. Homeowners are the one who dictating, are the one who are behaving and dictating how the real estate market is behaving or responding or happening. So we have to keep that in mind. So that means we are in May. And what am I seeing here, right? So if you have to guess where things are getting. So first of all, we still have we are still seeing in many markets multiple offers. Not only that, we're seeing multiple offers. When we filter out the type of properties that we like, inventory is super small. We're still buying. We're still getting some great opportunities, but they're very challenging, right? Right, you have to look at maybe 50 properties to pick, I don't know, maybe 30 properties to pick one that makes sense. A year ago, we had to look at maybe 15, right? So the opportunities are still there. It's still possible to buy, but it's very challenging. Multiple offers are still there, not 10 offers, maybe 3, maybe 4, right? Of course, I've heard of an exception of some more than 60, but let's just say, call it, an exceptional case. We're still seeing in many markets on good properties, multiple offers as well. Not as crazy. So things are, buying wise, are not hard to find, something that makes sense to us as investors. When I say makes sense, the age, the locations, the school, the size, the price, the cash flow, etc. Right? So it's hard to make all those work with low inventory when we are picky, right? There are a lot of property, there's obviously lots of more properties than we are willing to buy, but we are filtering the ones that we're not interested in, and the one that we go after, there's just not a lot of properties in most metros, right? Most metros, not all of them. So it's challenging, doable, but challenging. And then when we are coming back and looking at, and trying to buy, the things we're seeing, we thought at the beginning of this year, when I was talking to my colleagues, the property managers, other people, we thought that the rent is actually kind of stabilizing, maybe kind of flattening. It's not the case. Same thing. What happens, right? Remember those people who wanted to buy and the interest rate is high, or maybe they're too concerned about the economy. What are they going to do if they're not buying? Maybe they sold and need to do something, and maybe they're not buying. They're renting. So, and again, the supply, altogether supply is not, it's not great. So those people are renting and are pushing. The rents are still being pushed, pushed up. Maybe not as increase like we've seen before, but absolutely still not. They're not crashing. Again, on a case by case, could be a different situation. So what can you take from this conversation? First of all, obviously, we don't know what the market will do, and we don't know how the Feds will react, and we don't know what the what lending programs are going to come out there, and all of those parties, players, forces will impact what will happen, right? So that's very very important to understand. But long term, it's challenging to buy, not impossible. It seems like prices are not declining and actually, continuing to at least stabilize. I think it's starting to creep up again, right? Buyers are coming back to the market. How, why buyers are in the market? Well, normal seasonality, right? People normally make, buy and sell the high season of, of residential real estate, not investment, just real estate, residential real estate, is normally the summer, the spring, the summer, etc. We are at the springtime, so that's a natural time people are coming back. People are now realizing, accepting, understanding this is the new rate and I need to work with it, right? So there's no longer what was then, that's in the past. This is the new norm. So they're just saying, okay, deal with it, at least for now. Maybe hoping that in a few years, the interest rates will go down a little bit and they can refinance. And maybe that's the way they're thinking about it, which makes perfect sense. So buyers are coming in, inventory is still tight, inventory is not going up. Inventory for rental properties in many markets is also tight. What do you think will happen, right? Just think about it. What do you think will happen? And then that should, if you think that the real estate will continue to go up, then I think this should be a sign for you to go out and act and maybe invest. If you're not sure and you think that, I don't know, just sit on the sideline. That's okay too. By the way, that's very good. That clears us who want to come in and buy, of course. This is what's happening. It's very confusing. It's not a clear-cut seller's market. It's not a clear-cut buyer's market. It's like someone I spoke to, it's really nobody's market. But I think we're seeing signs that transitioning back to a kind of starting to tilt over to seller's market all over again, right? I don't know, but I'm kind of the sign that I'm seeing from the ground, from the people that we ground, and the inventory, or should I say, what inventory? So tight, it's unbelievable. It's probably the worst I've seen. So inventory low, high demand usually only pushes prices up. And when interest high, because we call it high interest rate, but in few days, few weeks, we're just going to call it interest rate. Not high interest rate, interest rate. And we'll just, okay, this is it. Now, before I wrap up for today and before I let you go for the weekend, and I thank you for you taking the time for joining this, I want to mention that we have a webinar coming up with one of my friends. His name is Robert Shemin. Has multiple books that he wrote on real estate, on understanding real estate. I think at least one of them, maybe even two, were New York Times bestseller. We've known each other for many years, 10, 12, and became really good friends over over that time. Robert and I, we keep in touch every once in a while, and I asked him weeks ago, let's do another webinar together. It's been 2, 3, 4 years did one. So I said, listen, why don't we do something together? Let's kind of try to help people understand what to do today. Let's try to tell them, how to make decisions, etc. So we have a webinar where I'm going to have an interview and I'm going to talk to Robert Shemin. and it's coming up on Thursday, May 18th, 2023, 6 p.m. Pacific time. It's free. It's online, Zoom, whatever webinar. You are most welcome to subscribe, to register, and then join us with your questions. If you cannot make it on that time, you can definitely register, and this way you can ensure that you will be getting the recording after the fact, right? So we send a recording. If you register, you'll receive it, and you can watch it after if you want. So that's what's coming up in about 2 weeks or so. I think it's a Thursday, May 18th, 6 p.m. Pacific time. I hope to see you there. It's truly just to share and explain and teach so you guys can understand a little bit better, kind of maybe try and decipher and understand what to do these days. And with that said, if you want to get in touch with us, me, Dani Beit-Or from Simply Do It, and want to talk to us about investing, you are most welcome. We are here. That's what we do day in, day out. Just send us an email, get in touch with us through our website, which is simplydoit.net. As you can see next to my name, send us a message. We'll set up a time. We talk to investors all the time. We try to help guys decide what to do. Those calls is more of an introduction call. It's kind of more of a calls to make sure it's a good fit, if we can even help you, ask questions, address concerns, etc. It's not a sales call. It's a let's get to know each other kind of a call. So thank you for taking the time. Hope that helped a little bit to understand what to do or what is going on these days. Have a terrific rest of the day. Have a great week. Thank you very much. I'm Dani Beit-Or from Simply Do It. See you on the next one. Bye-bye.